Hello everyone. I know it's been a while since I've done a trading video, but I just wanted to show you this one. I just finished a call with one of my students. Absolutely killing it. It's only been not even 2 weeks into the program, already doing some live trading. Did his first consistent day today after just like dabbling, practicing with just a few $1 trades, but actually got 9% growth on his account today and then put it away. And that's essentially what we're looking to achieve. I think it's really important, guys, to know what it is that you're trying to get out of the market. All right. So fucking important. It's like a gym. You see two different people at the gym. People that just go for the sake of going, or there's the people that actually have a desired goal who are trying to achieve that goal, whether it be bodybuilding or losing a weight. They've got some kind of desired outcome. So then they therefore apply themselves more. Same with this. We're not trying to have some gambling addiction here where we just like fucking, yeah, no worries, put some money in and just hope everything works. If I get some money, awesome. You need to know a desired amount. So whether it's a percentage or a dollar amount, know what it is. Now, what I've been shifting with a little bit now, guys, of late is what I've noticed with the students. The lower time frames, they are really good. They are really good for the ones who can apply themselves. Like, for example, Andy's absolutely killing it. He's doing better than me, to be honest. The other night on our Monday call, he got 17 and 2, 17 right, 2 wrong, turned $200 account into over $1,400 in 40 minutes. That's fucking incredible. But, you know, not everyone can do that because he's very risk adverse. Like he just bang, hit a trade, hit a trade, hit a trade. Whereas the vast majority of people don't have that ability to do that because they're a little bit more afraid of the outcome, a little bit more hesitant. And also it's very anxiety ridden. So what I'm trying to focus on now and shifting, or have the option, because at the time, some people like that, get in, get out, that's fine. I want to be able to have the ability to do a longer term trade, to avoid over trading, to have more focus on, you know, basically doing a trade or waiting for a trade to set up, a bit more smart money concept, or allowing the move to find and to present, and therefore hit that trade, go away, go do a few things, then come back and see how it is, as opposed to just sitting here like you're sitting at the pokies. We don't want that. All right. Need some smart, disciplined traders. And what I'm sharing with right here with you guys is your bread and butter setup. Now you got two really good ones here. There's a perfect buy and a perfect sell opportunity presented. And I was sitting on the call now with my student and just showed it, and it hit out awesome. We traded it. Now this is my demo account because I don't normally trade this time of night. It's 9:15 at night here in Queensland. So it's not my normal trading time, but this was really awesome setup, both to the downside and to the upside. So remember, smart money concepts, institutional move, right? So if we look at prior price action here, we can see we had some accumulation phase where price just went sideways, really ugly price action, just going sideways, right? Sideways. We had a little quick liquidity sweep here. This is our IC area, right? Very interesting imbalance. That's what that wick came down to. It came in and filled this imbalance, then came up, created its directional move. So essentially accumulation or reaccumulation, then we distributed down, right? So we created down, created a lower low. So now this is our new institutional area because this is our area of interest. This is our turning point. This is where the movement stopped, right? We stopped here. There's a reason why we stopped here. Why did we stop here? We can back test. There was areas here. I'm not going to show you that right now because it's a bit of way back. So now this here becomes a very obvious area of interest to me. You can see it clear as day. It's the IC candle, the last down before the up move that broke structure, which means broke the previous highs, that took the previous highs, right? So, and it's left in balance, which is what my little square is there. So as you can see, imbalance means that that little wick hasn't come down and filled into this area at all, right? So this is my IC area. I know price needs to at some point return back to this area. So now we watch the move take place, blah, 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 blah. It's doing really well. You know, this would have been a good opportunity for a buy as well. As you can see, a very clear break through the EMA, which we respected for the last couple of hours because I'm on the 15-minute time frame here. Couple of hours respected quite a lot. We had the full engulfing candle. I personally would have done a buy in here. Bang, 10-minute buy. If you got in right at the bottom, that's a 15-minute. You would have been up here, well and truly up here before it cleared, right? Anyway, so now this is our last area of interest. So this is our last up candle. As we can see, it took all those previous highs that were to the side here, captured liquidity, took the highs. Then we see a huge engulfing candle to the downside, right? Awesome. Which also correlates to our crossover on the stochastic. We can see a huge sharp movement down, split between the oscillator lines. RSI has the same confluence, a huge shoot down. But what's awesome, we don't always get it, especially at this time of night, but we got our retracement candle. So this is our engulfing candle. So this candle is bigger than the candle prior. Then the next candle comes through, retraces up to that golden pocket of 50 to 80%, and I would have executed a sell right there, and then we can see a huge runaway. Awesome, right? Bang, there's trade number one. Now, where was its turnaround point? Very interesting. Right here, come down and wick down here, which is the open of this candle, or the close, sorry, of this candle. Bang. Now, generally, you might see it retrace a little bit lower, but I'd be watching the price action live. And because that wick reduced so much, so if I was seeing this live and saw this wick come up, I would have gotten in for a buy straight away. But being patient, wait. I watched the price action here. I waited for the crossover that was taking place. The RSI really strongly moved up. Bang, as you can see through here, as soon as I saw this take place, this split through the oscillators, which happened during this printing of this candle, bang, I went in for a buy, and we went boom, bang, up we went. Now what's happening now is we can see a little retracement candle. We did respect off the EMA, which is very interesting, but I do believe this is just filling this imbalance. This is retracement, 50% retracement, hit a buy, bang, we hit a buy again off this, and off it goes. In theory, because we respected this and we didn't create a lower low, we are now moving up. We should, in theory, create a higher high, because of based off this was already created as a higher high as well. All right. So look, I'm not going to do it. I'll do a buy anyway. This is in my area here. I'll get if I can get another little bit of a deeper retracement, I'll go in for another one. So if I can see this profit disappear, this is one thing you can do as well, is you can do a double sell. So there, if it just retraces a little bit deeper, I'll just put this back up to, that should have been $1,000 anyway. I'll go in again for another one that's a little bit deeper down. Now I've just split my risk. I've added a double trading. I don't recommend doing this unless you're more experienced at trading and you've been doing this a while. But in theory, this should be our 50 to 80% retracement, which we can see here. We still got a massive gap in our oscillators. I'm a little bit concerned about RSI. I don't really want to sit here and keep talking to you guys for 10 minutes, but this is only supposed to be a short video. There's your deeper retracement there, which is also really good. Going for another buy there. And yeah, this should continue to move up based on how much that respected that area. This is still an area of interest because of that imbalance, which hasn't fully been filled, but it has. That was just such a huge rejection wick, and then it's such a huge engulfing candle. This should continue to run. So I'll just have another squeeze while we're here and just see if we can see some other areas of interest. Nothing too huge here. This is not very nice price action. I personally wouldn't really get into any of these trades. There's that low there, which was way down here. There's that area there. Don't really like it. When you see this, especially when the Bollinger Bands come really close together, if we have a look here, see how the Bollinger Bands are quite spread. That's really good because it shows that there is going to be some huge movements of volatility, right? When the Bollinger Bands are really close, it's not very nice price action. We want to see the spread. That's when it's better to trade. And we can see big gaps. It means it should bounce back up to those higher areas. Now, so if we go back to, so this is something that I wouldn't trade. There's a big wick to the downside as well. EuroCAD took that previous low, but rejected hugely. So for me, again, because I'm looking at the 10-minute time frame, 15-minute time frame, and I'm doing a 10-minute trade at the moment, looking at those longer term trades. So if I saw this printing live, right, saw this come down, this low, this wick came down, and just to capture that liquidity, reduced massively, massively reduced. As I'm seeing this reduce, and as long as I'm seeing that the indicators start to curl back up from that retracement, I'm actually going to go in for a buy. Now, based on probably this one here as well, this is where I do my buy execution. Now, remember, we're scalping here, so we only need to get in and out. You may not predict the actual move back up. Doesn't matter because you get in and out. A 10-minute trade executed here, you know, that could have been 5 minutes into that candle. We don't know exactly where that was at that movement, but in theory, even if it was the last one, this is a 15-minute candle. So, you know, we would have profited anywhere in between this area now. Okay. So let's have a look now. this is an interesting one. This is where it can fake you out. You can see 3 wicks to the downside. 1, 2, 3. This would indicate a reversal. This is like a toothpick formation. 2 wicks to the downside, retracement up. And now this next one's come through and gone, that stuff, yeah, we're still going to go down that way. So it's a bit of a trick one, that one. So that essentially, when you see that, before you just jump in on the toothpick formation, we need to have a look at the high time frame bias, because high time frame will always indicate where price is. So I'll even go to the 1 hour. This is why we do jump up. Price is there currently. Sometimes you got to go a long way back to be able to see where it is. This is why I like Liberty. I just don't have it open right now. Oh, there you go. Look, it's trading in a nice area. Have a look at that. So we scrolled all the way back to sort of see what it's doing. But a very clear, obvious institutional candle where it's trading in that imbalance. The last down before the up, the broke structure that took higher, that was imbalanced. We hadn't traded anywhere in that area at all for the rest of the time. So now it's going to make its decision. So if we were looking at where it was before, remember those two toothpick areas were sort of up here. So knowing that there's still a bit more room to go to the downside is why we can't rush in, and it's trading in that institutional area right now. So let's get our way back. And also, the 1 hour had still, as you can see, there's still more room to grow. We're not starting to cross over yet. So if I go back to that 15-minute time frame that we're looking at before, yes, we're starting to see some movement up, but the high time frame will have the bias. So it's always important, if you want a bit extra confluence, just go up a few time frames, have a squeeze, have a look on Liberty, see what's going through. Liberties are way better when it comes to indicators because these are quite lagging, right? That's why I don't rely on it. I'm just showing you this now, right now. And yeah, it's not an opportune moment to get in yet, even though based on these 2 candles would show, oh, hang on, we're in here for a buy. It's not, right? So it looks like these trades at the moment, it's just floating around my area, which is always the case, isn't it? When you do a trade live and you try to show someone. Here's a massive engulfing candle. We did take the previous high, but there's still, like, this is in theory is our actual high point to break structure. We are indicating down. That's such a huge movement. This is very unlucky. This is what I mean. This is what you sort of see in this later time frames. You see a huge engulfing candle, and it doesn't really ever retrace back at all, right? If that candle was in half the size, and then we had that nice little pullback, perfect. That's a good selling opportunity. Because this ran, it's really hard. Now we're sort of just like hoping that it continues. If we got a bit more of a deeper retracement here, yes, awesome. But it's also not an obvious liquidity sweep because there's a series of highs that it still needs to come to. So I'm not confident on that one. Let me just bring in some other pairs. See what else we got here. Here's a good one as well. This is our clearly obvious other previous low point here. Same thing, institutional, the last down before the up, the broke structure, took the high, continued to move it up. There's some imbalance there because we didn't quite trade into it. We came to the opening of that candle, but there's more room there, right? So I know if we're a few candles back from this, so say through here, I know that this is where it wants to come back to, right? But this is the difference, right? See that big closed full candle. There's no wicks on it. It's a big full candle. Even though that full candle has come and pretty much taken those lows, right? Because there's no wick to the downside, there's no price exhaustion. Okay, I need to see that wick if I'm looking for this particular method of trading, right? So that wick there, same as the one I just showed you on the Euro GBP. I see that wick reduce, I get in a buy as long as my indicators have crossed and they're starting to come up into that desired area. Awesome. I go in for a buy here based on that wick reducing down so much. Fantastic. Buy. Boom. You're going to clear that easy because this is half an hour of candles. We only need to get 10 minutes because I'm doing a 10-minute trade, right? Even though the move is still going down, doesn't matter because you're in, you're out. That's a really good one there to sort of see. Okay. We've got 2 minutes left and it's still riding my area. That has just taken that low, but we're not down enough yet. So there will be, if I scroll sideways, I'm going to see another area of interest where it wants to go to, and we haven't had a clear break of structure yet. This is just writing our area, but there's your big split. RSI is, I don't know why the RSI is pointing down. It's clearly reduced up. Bit of troubleshooting as well. If you are working through some demo trades, and if you're doing some, it's already, as I say every week, important, do 5 to 10 minutes worth of demo trades, whatever. You know, if you block yourself out an hour to sit down behind the computer, do some trading or do some analysis, spend 15, 20 minutes just doing some demo trading, especially if you're doing these longer time trades. Have a bit of a look, have a squeeze, analyze what's going on, do a couple. Are you hitting awesome? Are you hitting clearing easy? Are you predicting the movement or the change, the reversal, or are you just like completely wrong? If you're completely wrong, okay, you need to go back to your checkpoints and understand what's going wrong and where it's going wrong. All right. It's just going to ride these areas, isn't it? This bottom one's going to clear. So that me jumping in, something to know as well. Like I did get in a little bit too early and it pulled back, that pullback. But this is where if you split your risk, it'd be really important, right? You know, based on what I'm seeing here, yeah, it did retrace that deeper 80%, which is the desired mitigation point. 80% retracement is the desired amount, right? So because it went that little bit lower, you know, you can split your risk. So if you're not 100% sure of your entry point, like, because it sat there at sort of 30 to 40 for ages. And I'm like, it's not doing anything. And it came down, came up, came down. I thought that was our turnaround point. So if it's still like you're still unsure, I just cleared that one by B's doodle. Up, down, up, down, up, down. You can do risk. So, you know, instead of $1,000, go 500, hit it, go again, retrace up, 500, hit it. That way you're spreading your risk, because like you're going to see now, oh, that one didn't, like that was bullshit. But there you go. That's a prime example. Okay, so that's your split risk. That one didn't hit. It was like next to nothing. Therefore, you know, at least you haven't lost all on that one trade. Yep, you're still going to get some profit based on that particular trade. Okay, now this one was our better desired retracement candle, that lower one. Bang, and then that one clears by a country mile. So good examples there. Now, just waiting on that, like I do believe that'll continue to go. See how much that's reduced. That is literally just filling that imbalance before it continues that upward move. Pretty stiff. That one, just like tiniest little bit. 13, 18, 13, 2, 8. Wait, no, that's the time frame. Doesn't show it on there. Oh, wait, there it is. Yeah, there it is. 8 through 3, 4, 1, 8 through 3, 3. Oh, fuck God, it's 2 points. A point 2. Anyway, it doesn't matter. This happens. And if you find as well, like you are just getting it, right, you just need to allow a little bit more time. So maybe increase your time frame slightly. Like that one was pretty stiff. That one was just because I've gotten in a little too early. I rushed in, so I needed to wait for that slight deeper retracement. As you can see, that second one, that third one cleared heaps. This one here cleared by heaps. 8, 3, 3, 1, 1, 8, 3, 3, 5, 1, 40 odd pips. Pipette, sorry. Yeah. Anyways, thank you very much for listening to that video. I hope you got some value out of that. Just thought I'd show you because it's a really good example of where shit, you know, you could do, well, in reality, you increase your risk on that one. You just do that one trade, 10-minute trade or whatever it is, roughly 10, 13, however you, based on your analysis on how quick you are to react. You do this one, you sell it off, then we've got 15 minutes, isn't it? 15-minute trade. So 1, 2, 3, 4, that's basically 1 hour before it presents another opportunity again. Bang, you buy that one. Happy days, that one there. So you sit down, you do 15 minutes of analysis, you do one trade, 15 minutes or 10 minutes, go away, come back, wait for the opportunity to present, another hour's time. So essentially within a 2-hour window where you've only sat down for about half an hour, you've executed 2 trades and, you know, you've doubled or more than doubled your trading account, 15, 20, 40, 50% on your trading account. That's a lot better than what the bank's going to give you. All right, team, thank you very much. And I'll see you guys on the next episode. Whoops. Went away. Any other questions? Feel free to shoot them through. Love you all. Take care.